Banks are in focus. Asset quality still remains a big concern for them. CNBC TV18's Nimesh Shah caught up with Ravi Venkatesan, the chairman of Bank of Baroda, on the sidelines of the 19th Annual Asia Investment Conference held by Credit Suisse, and began by asking him his views on the NPA situation in India. Let's hear out what he had to say.
We're beginning to see the economy picking up some steam. The evidence is mixed, but there are lots of green shoots. And as the economy picks up, I think some of the stress in the corporate system will begin to dissipate. When it comes to recoveries, it's a big challenge for all the banks. I personally feel that recovering NPAs is not the core competence of a public sector bank. So I wonder why there is some reluctance to create a public asset recovery company where we can put all our bad loans and allow specialists to go after it. Maybe they will come to that conclusion, maybe they won't. Fortunately, Bank of Baroda is in a reasonable situation, not a great situation, but our balance sheet is sort of less stressed than most. And we've taken most of our provisions, and we think we'll be able to crawl out from this situation in the next quarter or two. But the system as a whole, it will take a bit longer. I think consolidation is perhaps inevitable. The government is mulling over it. The form that the consolidation takes is obviously the really crucial question.
You briefly spoke about if the growth picks up, some of the things will automatically resolve. What's your sense on where we are in the growth cycle, and how much we can see growth picking up?
Well, it's all relative. So if you accept the figures at face value, 7.5% or thereabouts, we're in remarkably good shape compared to most of the world. Inflation is under control. There's been good fiscal and monetary stabilization, macroeconomic stabilization. So I think the foundation is there now for the growth to really happen.
You're seeing credit growth picking up, because that's something which numbers don't suggest.
No,
if there is any growth, credit growth picking up.
Part of why we are not seeing credit growth pick up is we have consciously chosen to focus on the bottom line rather than expansion of the top line. So that's more a policy decision. But that said, there isn't a tremendous demand for credit either. But I think this is exactly what should be picking up soon. For instance, you see the commercial vehicle sales are up 25%. You see the construction equipment industry is up 25%, which says that some of those.
But that seems to be only a small pocket of roads and roads and infra projects which are picking up. The rest of the industrials and rest of the sector still seems to be very sluggish.
Correct, and that's because there is this huge overhang of capacity. You look at capacity utilization; it's typically around 60 to 70%, and until you get to about 80% threshold, people don't start looking at fresh investments. So I think there is still about a 6-8 month runway out there before you really see this. But one has to be optimistic, and I certainly am.
Okay, let's move on and continue on our